Well, I was talking about Barclays just a little while ago. Now Co-op entering the playing field as well, slashing its base lending rate by 1 percentage point. Any market reaction to that news yet?
Thank you very much, Alicia. It's a pleasure to be here today. Basically, just as you've observed there, first of all, it's a very good analysis of our market. Barclays Bank has been really shooting, and in reflection to what has been happening in terms of their lending rate. And Cooperative Bank has been also behaving in the same manner, because we saw it picking up. Right now, it's trading over 10 shillings and 50 cents, and that's a remarkable performance. And already investors are beginning to take position, especially now that first quarter results are just about to be announced.
Well, for now, we've got certainly Cooperative Bank, one of the cheapest amongst its peers in the country when it comes to its lending rate. One would assume the signaling that this is only the beginning of things really spicing up in this sector. I mean, banks have been so resistant to cutting their lending rates in the past. What are you anticipating from here on out?
Well, thank you very much. Looking forward, basically, just as you've noted there, we've been seeing a lot of struggle, especially in terms of how the banks have been reacting to what central bank has been doing in terms of reducing the lending rate. And especially one of the major concerns that the banks have been having is issues to do with the default rate, which has been a big concern. But looking at where the banking sector, especially noting where we are in terms of the macroeconomic environment, we're talking about economic growth of over 4%, which will really be reflected in terms of their performance. And also looking at some of the new developments that you're seeing in the financial markets, like the credit referencing bureau, which will be starting to function very soon. Yeah. So definitely looking at some of these things, we're seeing a lot of these banks beginning to position themselves, and the sooner they take advantage of that, they'll be able to be very well placed to be able to take advantage of the economic takeoff.
If I have to use Ali Khan Sacha of Rich Management's terminology for the strategy these two banks have employed, we're going to call it offensive. I mean, what do you see the spelling then for the bank's defensive strategies moving forward? Because some was saying surely this is still a bit too early to be letting their guards down completely. Are you convinced of the risk mitigating strategies that these banks currently have in place that would safeguard them from non-performing loans and the rise thereof moving forward?
Thank you very much. Ali Khan's analysis is very good in terms of offensive approach, because we've been seeing most of the banks being very defensive, especially when it comes to lending. Most of their loan books have been consisting of mainly institutional borrowers, as well as some of the fairly young professionals who are very well employed, and in terms of guaranteed payment. And seeing them taking the approach that they're taking now, well, just as you observed, it's an offensive approach, which definitely looks like it's a bit risky and a bit of a concern, especially noting where we are in terms of the macro as well as the local operating environment. But looking at some of their approach, especially most of these banks like Barclays Bank, which has very good reserves, as well as Cooperative Bank, which is also very well capitalized, we see their approach is going to be fairly profitable in terms of how they're going to be able to perform. But definitely they might need to be very cautious about who they lend to.
Well, certainly we had the central bank sources last week reveal that we've got 2 large and 3 medium banks informing them that they would effect cuts moving forward. Is there any speculation about who some of these other players could well be?
Well, the speculation is very much rife, but at the moment we are still hoping that some of these banks, like for instance Kenya Commercial Bank, which has been really steadily rising, also we are seeing it trading over almost 23 shillings. So it's one of the ones which most people are hoping they're going to be able to take advantage of such, and especially some of these very well capitalized banks. Some of the other ones which people have been a bit cautious about are like NIC, and so for now most likely it could be either KCB or some of these other very well capitalized institutions.
Let's turn attention to some other news making headlines. Where consumers will be spending more as opposed to saving. Oil marketers have increased their pump prices due to international escalation of the cost of crude oil and refined petroleum products as well. Good news, one would assume, for Kenol Kobil. We already saw that share price climbing 4% yesterday.
Yes, thank you very much for that observation. Basically, inflation has been one of the things that we've been trying our best to keep at the minimum so that we can be able to encourage spending in terms of the local market. But definitely looking at the crude prices, especially their performance over the recent past, definitely inflation is one of the things that we're very concerned about, especially in terms of consumer spending. And also in terms of business, for instance, for people like us who are a bit concerned about whether disposable income is going to be slashed, definitely that's one of the concerns that we have. And as far as the petroleum farms are concerned, definitely that's going to be a revenue for them, though the concern as at now is if at all the crude prices reduce, whether their stocks are going to be able to replenish or they are going to be able to sell in good time for them to be able to still reflect the reduced prices. So in terms of the local market, we are a bit concerned, especially as at now, and we are hoping that we're going to see a bit of activity, especially in terms of how we're going to be able to ensure that our energy costs as well as fuel costs are going to be managed.
Well, just looking at Kenol Kobil specifically, we've got that share price sitting at about 77 shillings 50 at the moment. We've seen this counter drift lower aside from yesterday's performance. Some saying, though, those recent full-year results justifies a price nearer to the 90 shilling mark. What's your view on that counter and the share price?
Well, thank you very much, Alishia. That's a very good observation about Kenol Kobil. Recently, before they give us their end-of-year results, they kind of like revised their projections, and because of that, a lot of investors were a bit concerned about the direction of that share. And you saw a lot of people even ending up buying the share at a very, very high price, and some of the people even who suffered significantly because they bought at a significantly high price because of the anticipation that the company was going to announce fairly good results, and even in terms of their dividend payout. And because of that, it's caused a bit of a reaction in terms of the market, and we saw a lot of profit taking, which is one of the things that's causing the share price to decline, and also a bit of more of a price correction, which basically reflects how they're going to be able to perform. But looking at it in the range of 75, it was it's still fairly priced and also a good buy.